Right, hello everyone. Welcome to another tutorial. Today we'll be covering a relatively old concept in technical analysis, but it might be new to you. It's titled Breakouts and Breakdowns. Okay. I'm not going to cover breakdowns today, but today we'll look into breakouts and how to use them when you trade. Breakdowns is pretty much the opposite of breakouts, but for today's update, I'll just give you an overview of breakouts and I'll give you some examples. Okay, so how does a breakout form? Well, in one of our previous updates, we covered resistance levels. So let's say you have a particular level as some sort of resistance. In other words, the instrument that you're trading, whether it's the euro, the pound, or a stock or a bond, people buy, it gets to a certain level, then buyers say, oh no, they're not interested anymore. It starts trending back down. Then people buy up again. Gets to a certain level, people say, oh, we don't think you can go any higher, and they sell down again. Now, this level where it keeps bashing its head against is called, don't know if you can remember, resistance. Okay, so hope you can see my writing very clearly. This level is called resistance. So resistance levels don't last forever, right? So at some particular point, it's gone up, it's bashed its head, come back down. It's gone up again, bashed its head, come back down. At some point, it gets enough momentum to break through, right? So in other words, people are not afraid of this psychological barrier anymore. They have a lot of faith and confidence in the underlying asset to buy it at even higher prices. So that being the case, you'll find that this psychological barrier doesn't hold anymore, and people buy and it eventually breaks through. This is usually a good sign. It means that the bulls have taken control of the market, and people are willing to hold this asset at higher and higher prices. So such an occurrence usually signals that traders should be on the buying side because prices might go even higher. Okay, so I'll take you to some of my charts so we can actually see examples of this forming. Okay, so let's get rid of all the markings. So this is a daily chart of the euro, right? I think we can draw, if you look carefully around here, there's a bit of a resistance around here. It's not very straight. Let me get rid of that. Okay, there you go. Okay. So, as we can see here, prices trended down, came back up, bashed its head, came back down, came back up again, bashed its head, came back down, bounced all the way. When it got here, instead of bashing its head and coming down, guess what? It broke through. And once that happened, it didn't take very long for the market to rally all the way from 1.27145 to about 1.30634. So that's about 300 pips after a breakout. Yeah? Okay, let's go to another chart. Get rid of this for you. Let's zoom in a little bit. Okay, so this is the pound. We just covered the euro. Let's look at the pound. Okay, we have a bit of okay, let me draw that straight for you. There you go. A resistance point around here. Okay, so if you look carefully, prices came down, went up, bashed its head, came back down, went up, bashed its head, came back down, went up again, bashed its head, came back down, went up again, bashed its head, came back down. The day prices were able to break out of this resistance point, guess what happened? The pound went all the way up. It went all the way up from 1.57 to about 1.663, thereabout. So that's about what? A 600 pip move. So usually when you find breakouts, it indicates that, hey, people are interested in buying and you should join the bandwagon and go on the long side. Okay? All right, guys, I hope you learned something new today. And in our next update, we'll be covering breakdowns. Okay, have a good one.